Welcome to ATI Pro Media. We are powered by Advanced Trading. Welcome to the first Friday of 2025. Markets aren't really getting off to a great start. Seeing some pullback, right? We're seeing estimates out of South America raising soybean production in Brazil. We still have some weather issues in southern South America, Argentina. I think we need to talk about. Also, are you in the area that's going to get a lot of snow? I know I am, and I am dead center where it looks like right in central Illinois, we're going to get a bunch. Other than that, we need to talk a little bit about export sales. They were a little bit disappointing. And also today, we kick off the new Congress, officially Republican led. We're going to vote on a new House Speaker, and we'll see where that goes. So, with that, bring in my co-host, Brady Huck. First show we're doing together. Oh, here we go. Here we go, up close and personal. First show we're doing in 2025. How are you, Brady?
Good morning, Connor B. Happy 25. Good to be back here.
Yeah, good stuff. Well, let's go ahead and quote up the markets. Definite pullback looking corn, soybeans, wheat, definitely. So quote us up.
Yep, doesn't go up every day in 25, I guess, but March corn down 5 cents, 454 and a quarter. March beans down 12 and a half, breaking below that $10 level, 9.99 and a half. We got meal down. You got Chicago oils up. Chicago wheat is down 9 cents, 536 on the March contract. KC wheat down 7.5 at 544. Feeders leaking lower here out of the gate as well. January feeders down 45 cents. March feeders down 87.5. Fat cattle up in the front, down in the back. A little mixed on that trade. When you look over the hog market, we got February hogs down $1. April hogs down 77 cents. Jumping over to energies, crude's up 30 cents, 73.44 on the crude market. Diesel's down 2 cents. Nat gas down 17 cents on February. That contract just continues to be wild contract, wild price action. Over the equity market, the Dow's up 86 points, the S&P up 33, and the NASDAQ up 200. And then Bitcoin down 400. We got to talk Bitcoin, I guess, sometimes. So. That's kind of a wrap of your markets. But yeah, I guess the grains can't go up every day, Connor. We got to give some back. I was banking on every day in 25 was just going to be up.
I wouldn't have minded maybe the first week, maybe we were up both days. Was that too much to ask? I guess so. But yeah, interesting. You know, when I look at soybeans, my eyes go to Nov 25, right? We saw, don't quote me on this, but I think what was the high? It couldn't have been much over 1030 yesterday. We knocked on that door. It looks like the high today was 1029. Looks like maybe we'll see some decent resistance at that point. But all of that could change very quickly, right? We can look at charts until January 10th. I think we're probably going to say it every show leading up to that. But that USDA report, things could change very quickly with that. So please keep that in mind. We'll be sending out some hedging, different recommendations. I know leading up to that, but other things that's going to change. We got a new Congress in. Officially Republican-led Congress kicks off its first day today. We're voting on House Speaker, right? We're going to see Mike Johnson. I don't think he's a shoo-in, right? A little bit dissenting opinions on him. I think Trump likes him, right? But some people don't. So who knows if it's going to be him or someone else? But I guess my main question, Brady, is what are we going to do as far as Farm Bill, right? The rhetoric article I read this morning said that it's on the forefront of a lot of people's minds. They want to get a new Farm Bill, right? We're let me make sure I'm right. Almost 2 years delayed in getting a new one. We've continued to kick the can down the road. Call me a skeptic, but I just don't know how soon it happens. Is it truly a priority for this new Congress, right? We've got an extension with that spending bill we passed. What was that, 2-3 weeks ago? So I don't know. Time will tell. Maybe they'll surprise me and it'll get done quickly. What are your thoughts?
Yeah, it just feels like it's kind of a kick the can type of deal. But to me, 25 is going to be different. And you got to be prepared for change. The domestic, grain consumption, and then the question on tariffs, retaliatory tariffs, and global protection. Those are three big things here as we go into the new year that could really change the game in these markets. And we've highlighted that. Dr. Cruz highlighted it in his premium deal yesterday, and Brian Basting highlighted it as well. But yeah, the Farm Bill politics, you got to love it, I guess, Connor.
I guess you gotta love it. I don't know. Like it or love it, it's gonna be a factor, and it's gonna be a big one for 2025, right? Uh, Dr. Cruz he did a premium just recapping soybeans. He always has some great charts, and I think that's the takeaway is looking at biodiesel, renewable fuels, right? We're kind of in limbo right now. I don't know if limbo is the right word, but that blending tax credit is no more. We're not sure what the 45Z really entails. And so we probably need some type of government. We need some type of rhetoric really to keep this soybean market going, because I think the other takeaway that I have is when we're looking at South America production, I know the bulls are going to tell me it's getting drier in certain areas, and we need to listen to that. I have a chart showing the potential for dryness in Argentina, but at the end of the day, we've got record soybean production in South America, and we saw StoneX reflect that, right? I saw that they raised their estimate a big jump, right? 166.2. Think of it a little bit down below, kind of where CONAB is, and then they increased it to that 171.4. Which is more than what the USDA has printed. So big increase. And at this point, we can debate where the final number is going to come in, right? They're going to tell us that January 10th. But at the end of the day, it's a big soybean crop.
Yeah, yeah. I think there's a reason these markets move, right? And that headline there is kind of the one that jumps out at you and says, "Whoa, whoa, are we getting ahead of our skis here a little bit, Connor B?" We've had a nice rally in corn and beans. They're actionable. They're worth looking at and paying attention to. My question, I guess, is: are you getting bowled up on the rally? Or are you actually doing something about it to go out there and defend what we've gained? March beans have put on 60 cents over the last couple weeks since they bottomed out there. So, and I wouldn't call that a bottom. I just call that, hey, we're 60 cents off the lows from that low to that high, and that's worth paying attention to, Connor.
Yeah, absolutely. Here, I have the weather. Speaking of weather, right? Bulls are talking about significant dryness, and it's not to be ignored. Look at this is southern Brazil, northern Argentina, right? They past precipitation, they've been dry, and then looking at this GFS run, they continue to look drier in that section. The one thing I always try and point out is main soybean producing region in Brazil is north of that in Mato Grosso. Weather doesn't look too threatening, so really it's going to be that story in Argentina when we go forward. And so, with South America and with Argentina, we got to look. We got to look at what the corn, right? We're going to start planting corn in South America before we know it. And so everything, if we see a delayed harvest, that's going to affect that safrinha corn crop. And so a lot of those factors, right? A lot of moving pieces. We're going to know more of them in the next couple months, but I don't know. When I see that weather chart, we got to respect it. But at the end of the day, I still see potential for a big South American bean crop.
Yeah, you got to not let the noise get to you. It's that time of year where, the beans coming out, is the corn going in, there's dry here, there's wet there. And is that slowing you down? Is it feeding your bias? And is it preventing you from defending and executing? So you got to block out the noise this time of year, because it gets really noisy. Everybody's got an opinion. They're going to tell you how great they did last year, or what you should have done last year, and it's going to feel really smart in hindsight, but we have no idea what's going to unfold over the coming months, weeks, or year, Connor B.
Yep, well said. Hey, here's a good chart. Look, speaking of weather, anyone watching, who's in this? This is from Eric Snodgrass. Just looking at total snowfall, and as you can see, good part of Illinois. It looks like it is just targeting Indianapolis right there. But I'll give you a guess where I live, Brady, in Central Illinois.
Are you right there in the purple? Are you somewhere?
I'm not quite in the pink, where if you squint, you can see where it's pink, where it's looking like I'm not quite there, but I'm definitely in the purple. So I'm gonna be. I only have a 10-mile drive, so I could make it. But I think you might see me filming from home Monday, depending. Right, we'll see. Okay. We'll see if it all comes. But potential for a lot of snow.
Yeah,
Yeah.
ready to shovel the drive and scoop the snow and get the salt out on the drive. Yeah.
Yeah, because that, I mean, even outside that, we're looking at, a couple inches across almost all of the Midwest, and then that swath of significant snowfall. And I
Yes.
think with that, then going into January, we're looking at significantly colder temperatures as well.
Winter is here finally. We've been very mild and have been blessed with good weather here up until now, but it sounds like winter's finally arrived. I'm glad to see that system, up a little farther north. As if that dips further into the south, they're just not as prepared and set up for that cold air blast to rush down into like states like Georgia, those areas. But yeah.
Good point. Good point.
Winter's here. It excited the cattle market yesterday too, Connor. Boy, howdy, cattle took off and bids jumped. It's good to see, good to see the market continue to grind higher, but they're pulling back here a little bit today on the feeder cattle side of things. But those snowstorms, when they come into the forecast, weights gains go down, weights go down, performance goes down, and kind of can excite the market a little bit too. So,
Gotcha. Well, good stuff. Well, hey, other thing we need to talk about, we have export sales that get released every week, and I want to talk about it because I think it probably exacerbates the weakness we're seeing today. As we saw export sales beginning of the year, they were kind of disappointing, right? Across the board. Let me pop them up here. Corn, soybeans, wheat, all outside, if you're looking right side of the chart, expected range, right, where analysts thought we were going to come in. Corn, soybeans, wheat, we were all under the expected range. So, this is just kind of week on week, and then it compares it to last year as well. But a little disappointing to start the new year, right? I would have liked to see a little bit better export sales, especially in the corn market, I think.
Yeah, you got to take those with a grain of salt as it's through that holiday trade, but we still need to pack those sales on and move the grain out. And it's that time of year, and these last few weeks, they all add up. So it's important stuff to be looking at and paying attention to.
Definitely. So, hey, other thing, you weren't on the show, so I decided to talk about cocoa. Right, we were talking about the biggest winners.
I watched, yeah.
But other thing, we got to mention, hey, S&P 500 clocks first back-to-back 20% gains since 1998, and so here we go. Rick put this chart together for us, and so or he grabbed this chart. I'm sorry. But, the takeaway is when we talk about individual stocks, how they perform, you got to remember, if you didn't average 20%, you did not beat the market, right? S&P 20% back-to-back years, first time since 1998. Brady, remind me, what happened in a little bit after that, right? 99, 2000. Did we continue that momentum or what?
You're aging me, Connor. I'm not that old. Jesus, come on, Connor.
It was the dot-com bubble, right?
Okay.
So
I was in middle school those years. Come on.
But other one, Rick, I thought this was a great one. We're talking about cocoa. Is forget Nvidia.
Wow.
Look at cocoa gains, right? And so go talk to your financial analyst and say, "Get me out of Nvidia. It's time to buy some cocoa beans."
Nice. Yeah. Wow. That's yeah. It doesn't catch all the headlines that Nvidia did this year. Nvidia sure caught the headlines last year, 2024. Pop up that S&P graphic again. I want to look at that one more time. If you guys can throw that up, that's fascinating there. But what a year for the stock market. Even the weak performance going in kind of to the end of the year, the pullback, still putting together a solid run. I guess it's easy being a financial advisor. Just throw it in the S&P, one of those ETFs, and let her go to work. But it's interesting to look at that and see, there's some back-to-back type of green gains in performance over the years, but every once in a while you have that big year where we pull back and sell off 10-20%.
I like that rhetoric, Brady. It's easy being a stockbroker. The real work is being a commodity broker.
Let's reach around there, give ourselves a pat on the back. Dealing with these commodities, it's a tough environment. So
yeah, good stuff. Well, I think we got a few questions. Anything else?
Yeah, let's throw up. I got a new little deal we're going to try to start working on. Tweet of the week, Connor B. Let's do the tweet of the week.
Tweet of the week.
I like this. Suzanne Stroud here. Did you know December corn has ended the year lower than it began? 7 out of the last 10 years. The only years it finished higher in November versus the first trading day in January were 20, 21, 22. which were anything but normal years. Today's open near 443 is 50 cents lower than last year, but remains the fourth highest start for Deese corn of the past decade. And then she's got that great graphic. Suzanne's been putting out some really good content here is in the month of December. Go follow her on Twitter if you aren't. But look at those charts, Connor B. What's your thoughts on, okay, Deese corn's trading, ending the year, began the year 7 out of the last 10 years higher than, and then ended lower in those 7 years. What's your thoughts there, Connor B?
Yeah. So 7 out of 10 years, say it again, 7 out of 10 years, we have ended the year lower than we began December 1st, but it's the 2025, right? Pop that up again, is opposite, right? That's what
20, 21, 22, those trade war years where we rallied up, and those really strong bull market years, we actually, that didn't hold true. But 7 out of the last 10, we started the year higher than where we finished in November.
Oh, I got you.
Yep. There's some blips of volatility throughout there in the summer. I look at that as, everybody waits for that June, July timeframe. But my thought here goes, you wait to time your new crop sales in April, May, June, like the seasonals tell you or everybody tells you. But really, good prices can stare you in the face December, January, February, March, and waiting for March, April, May to go out and protect price. You're putting yourself in a position for that cliff of a sell-off if we have a bearish year, and really setting yourself up to have to time that market. But that graphic to me says that January is not a bad spot to be doing things.
Absolutely. Yeah. When I hear people just preaching seasonals, I think I go back to 2017, 2018. I swear you could go to a meeting and a crop insurance agent would say, take out the 85% crop insurance and sell 85% of your crop in May, June, July, right? Because you have it. And it works, right? The chart shows it 7 out of 10 years. We're going to be lower come December. The problem is when seasonals don't work, they really don't work. And so, I think we got to respect the seasonals. They're a great time to pivot. But we got to respect, right, the unknowns and those years that significantly change things. We got to make sure we're doing the right things for those years too. That's my takeaway, I think.
That's a good point, Connor B. I'm glad you said that, because there is the other side of the story there. Those 3 years, that was the just wait for better prices type years. If I don't sell it today, wait for tomorrow, the market will be better tomorrow. Because those markets, they just kept running and running past where anybody thought. And it was a great time to be in ag. And unfortunately, 7 out of 10 years, we're not in those environments according to that graph. But on those 3 years, you want to be hitting home runs, and it feels great to be hitting home runs in those 3 years. So don't box yourself out of the corner and paint yourself in a corner in those 3 years. Good stuff.
I like it. Hey, maybe it's every Friday. We need that. I like this as a new segment, Tweet of the Week. We'll just highlight some either polarizing, very smart, or funny tweets. We need to pop them up. I like it.
Yep. Okay. Well, if you're out there watching and you see something you want us to talk about, share it with us, send it to us, and maybe we'll put it on the Tweet of the Week each week as we go through it.
Yeah. So, okay. Well, hey, we got a few questions. First one from Luke. Tech bubble both times. Wasn't most of S&P gains last 2 years tech stocks, and more specifically NVIDIA? So we know 2000 bubble was definitely the 90s run was definitely the .com boom. The past run for, I think, the last year, 2 years, if it wasn't tech, it was very heavily weighted with the FANG stocks, right? The top end, when we look at the S&P 500, the gains were significant with those top 10 stocks.
Mm-hmm. Yep. Well, it seems like a rising tide lifts all boats, and whether it's led by tech or AI or whatever it is, it sure helps pull up every other thing with it. But yeah, definitely some bubbles that can develop out there. I've heard interesting comments about and this goes way deeper than we ever want to go, but talking about interest rates and the low interest rate environment of the 2010s, and was that a bubble in itself that fed to some of the things that we'll pay for down the road? It's deeper than what I can comprehend though, Connor B.
Interesting though, right? And this time last year, we were looking at a whole lot more rate cuts than we actually ended up getting, but interest rates were a big talking point. I don't think that's going to change, right? Inflation's not necessarily going away, right? Time will tell, but I think it's going to be a talking point for us in 2025 as well.
Yeah, a lot of concerns about inflation 2.0, inflation 3.0, whether it will come back. And the Fed, they're pricing in, I think, 2 cuts here for this year. A
Yep.
year ago, Connor, they were pricing in 6 cuts for 24, and we saw 2 cuts. And there was a lot of debate as to whether even these cuts were necessary. So
Right. And
things
those
will
two
change.
cuts came at basically the last quarter, right? First one came in September, October.
Yep, we had a quarter in
Yep.
September or October, which I don't know. Yeah, then one in D's. Yep.
Good stuff. Okay, next question from Russ. What's your opinion? What percentage of 2025 soybean production do you recommend we have priced right now? Ooh, Russ, I like it. Putting us on the
Hot
spot.
spot. Hot spot. Who's taking this one? Not a
I'll give my opinion. Looking at this soybean market, right? Us at Advanced Trading, we always want to price in the unknowns, right? But then also we got to make sure we know the volatility, right? Soybean market is going to move significantly. That's what history tells us.
Mhm.
I think if you want to be protected with puts versus looking at making sales and re-owning with calls, you got to start on the soybean market. You got to start with making some sales. And so I wouldn't be afraid to get a little bit more aggressive on soybean sales than corn sales, right? We can always re-own them on paper, but we got to respect the negative news and be ready for it. So, I am leaning more towards a little bit more aggressive sales in the soybean market because I think that gets us a much better floor, right?
Mhm.
Make sure we have skin in the game, right? I'm not saying throw all the eggs in the basket, but I look at that run up to 1030, right? That was a good opportunity. I look at right now we're at 1012, so
Yeah.
that's kind of my thoughts. What do you think, Brady?
I like it. You nailed it there. So minimum price type contracts. That's what we're talking about. Making a sale, owning a call on the top, keeping yourself in the game going forward because things can change. The balance sheet can change, and there's a lot of call spreads out there in the November, January, or short dated options that get you through July, August, September. Some of those key volatile growing month time frames. But doing those types of strategies defines your risks and allows you to benefit if the market goes up. But this to me, we put 60 cents on this market, so what is your risk out there? You have a significant amount of risk. These markets can move dollars, they don't move dimes. So good stuff,
Yep.
Connor B.
Yeah. Okay. Well, always appreciate the questions from everyone. Any closing thoughts? We'll go ahead and wrap it up and get in the weekend.
Yep. Nope. Happy 2025. Good to be back in the building with you, Connor B. And stay warm over the next few days. We'll see if you're in your office Monday. We'll see what areas get the freezing drizzle, the snow, how much snow comes with it all. But stay warm over the weekend. And we'll see you guys next week.
Sounds good. Everyone have a great weekend.